We were really one of the first people in the sector as black females as well. And the thing about building your portfolio, it's not like CFD trading where you can blow it. It grows. We need to learn to build generational wealth. And CFDs, unless you use it very well, and unless you're very tactful and skillful in it, you may not see that opportunity to do that.
Maybe they found the holy grail.
And yes, but you see, you find it, but can you maintain it? People get stuck in wanting one particular strategy to work. It's not the market that's making you lose money. It's your psychology in the market. It's not about making quick money. It's not. And if you start off with that, you're doomed. Unfortunately, you're doomed.
What's up, guys? It's somebody from Top Trader South Africa, and I'm bringing you guys another installment of Market Masters, where I sit down with the most prominent figures in the game. And today I'm bringing you guys a very special episode. I've got a very, very prominent figure. I've got Moxima Gama with us today.
I mean,
yeah,
with that intro.
Done.
I must not falter. I'm good in you. I'm excited to be here.
Yeah, I'm excited. It's been a long time coming, yes.
Yeah.
It's crazy that we actually spoke about this last year, and then it's only happening
I thought
now.
you guys forgot about me. I was like,
But we spoke about that. Yeah, we spoke about why it's only happening now. And I think timing for me is it's everything. Everything's supposed to happen when it's supposed to happen. I'm a strong believer of
even
that.
in trading. Timing.
Yes, and I think a lot of people struggle with the timing thing, lack of patience, lack of discipline, and then things don't happen. But things are supposed to happen when they're supposed to happen. But I think a lot of people, even coming face to face with that reality, is difficult.
Because we like being in control.
Yeah.
And we don't understand anything else. But timing can tell you who's boss.
No, thank you so much for making time to come and sit down with myself today and the couple thousand people who are going to be watching later on. But we're here to talk about you, your story, your origins, where you come from, your upbringing as well. Because I think a lot of people might not know who you are. The general, but you've been everywhere. You've been on CNBC. You've been like everywhere at this point, right?
Sheer serendipity, though. It kind of, when some things just land on your lap. Being on CNBC and stuff is because I was working for Standard Bank at the time.
Okay.
And they were like, you are going to do that. And I just naturally progressed to that. And I guess I'm also have that personality that takes on things, and then it just avalanched to being in many shows or stuff like that. But it wasn't something that I'm great to be on TV, though. It wasn't something I anticipated at all in my future, but yeah.
No, that's beautiful. Let's get into a little bit of upbringing. Like, how is your upbringing? Let's start with that, and then we'll just build on that.
I grew up in a family that was very loving, and it was a very close-knit one in terms of cousins, and even we grew up together, and a very ambitious family as well. We've got an array of type of professions in there, and I was actually telling my sister at some point that we have a few doctors in our family. And nurses, besides other professions. And I thought I had to, because my sister's a psychiatrist, I thought I was going to have to become a doctor myself. And I was dreading it because blood and stuff. And when my brother said he is going to do finance, I figured, okay, I'm doing finance. So that's how, there's a lot of people who had studied, and there was that encouragement to get yourself out of something and to become something. It's best to hit the books. Yeah. So it's a very academic type of family, very humorous, but really good upbringing. I grew up in Soweto, actually.
Oh yeah.
Yeah, at Diepkloof.
No.
Yeah, and the community in Soweto is a huge deal.
Yeah, it's such a huge deal. I remember when I started visiting my family that side in Soweto. One thing I was very confused by is that we were walking down the street and everyone is greeting everyone.
Isn't that lovely?
I'm like looking at my cousin. I'm like, bro, like what's happening? He's like, Anton, it's the way we do things here.
Yeah, and you'd have your neighbors looking after you, or it's just such a beautiful community that we don't have now. And I think it created a really good foundation. So besides my own family creating a foundation, I think the community of the street I lived in. I also dabbled a bit in East Rand. Are you not from the East Rand?
Yeah, I'm an East boy.
Yeah, you're East boy. So I went to school there actually.
Oh yeah.
And so they also had quite of a community. So I think it was such a collective thing that I can't say it was my family was, they were hugely responsible for my upbringing, of course. But the community thing and being together was definitely something that was birthed in Soweto, actually. Yeah.
Okay. So you were in Soweto. You went to school in the East Rand, and then how does life progress from there?
So I went to school in the East Rand, then got back after varsity. After it's grade 12. I almost said standard 10. Grade 12. Before my age gets
you're exposing yourself now.
After grade 12, and then I kind of moved back to the south, or to Johannesburg. Which East is also seen as Johannesburg, ne?
Yeah, no.
Yeah. So more in that area, and I've just been in this. Okay, besides the fact that I actually did move to Cape Town at some point.
Okay.
And I do live there too. So what was the question? I think I derailed a little there.
No, it's fine. No, I was just genuinely asking, like, after high school.
After high school.
Yeah.
Straight after high school was varsity. As I said, my family was very strict on being in the books. So after that, after varsity, after high school, straight into varsity, did my finance degree there, mastered in economics, risk management, and there was a third major, finance. And then funny, when I was at varsity, I started already working for a stockbroking firm. At the point it was known as BJM, Barnett Jacobs and Millet. I think they were taken over by Renaissance Capital or something.
Okay.
Am I allowed to mention all those things?
Yeah, you can.
Oh, okay.
Yeah.
So I used to do my vacation work there. So when other kids were on holiday, I was going to, stock. It was me and a few of my other friends. And that's how I actually got into the space, because I wasn't too sure what I'm going to end up doing in finance. And I wish they had a lot of those type of programs for kids or young adults that leave varsity, because it was a really fruitful task in our world to be able to experience different departments in an organization, in a finance organization or stockbroking organization. And that's how I landed my feet in being an analyst, but purely for stock market analysis.
Yeah.
I didn't even know what a technical analyst was at that time.
You're just moving about.
I just moved about, but I enjoyed. I remember I was sitting at a trading desk, and I was like, this buying and selling thing is a bit. I could see people's emotions. I was like, but is there nothing else I could do but still be in the space? And the person who actually got me into technical analysis, I'll never forget him, and I hope I can reach out to him again, was Andila Mazwai. And he said, don't you want to be a technical analyst? I was like, what is that? And then he walked me through it. And luckily in that organization, I was, at the time, Andy Patterson was number one in South Africa, number one rated in South Africa for a very long time. And I had the privilege of being mentored by him.
Sure.
So, look, my career trajectory was really, I'm very grateful for the steps I took and for people who helped me, because we were really one of the first people in the sector as black females as well, trying to find our feet in it. And we got great support.
At least.
Yeah, because I think it would have put me off completely in finance if we didn't, because the finance now is a bit on the scary side.
Yeah.
But yeah, I think that's how I then got into technical analysis initially.
Yeah. I was going to ask, was money talked about in your family? Was it
No. Not enough.
Not enough. Okay.
Not enough, and not about the psychology and your relationship with money.
Sure.
And I actually did a talk at Standard Bank, which, in fact, I am now starting, because I did a whole lot of research about it, and it's about people's relationship with money. And I mean, to be honest, us like people, we need to form a relationship with money because we don't have a solid one, and it wasn't spoken about to a point that I do think there were many loopholes in my psychology with money that I am now, after I had done that research, I'm trying to mend. So I think when you don't have that proper foundation on the psychology of money, there is a bit of a struggle on keeping it and perpetuating it.
Yeah. What filled those gaps though along the years? Because I'd like to believe over the years you've learned some things yourselves. And in terms of like filling that gap of like that lack of relationship with money, if I can put it like that.
I think it would definitely be in the sector I'm in, finance. Okay. Then you get exposed to a lot of products that make you aware of how to grow your monies. But the strange thing is, even when you're in that position where you're surrounded by a multitude or a plethora of these products that you can grow your money, and you still don't, you still don't get into it. So the funny thing is, when I was in finance, the money I was getting in, man, I was just like,
yeah.
And at the time when we were there, our biggest aim was getting our own places, getting our own cars, and just flexing in that way. And we already started acquiring debt, and I think we should have done it in a backwardsly.
Okay.
We should have already started investing before acquiring so much debt. But it was the first time for a lot of us to own at that age in your 20s, to own your own house and get your own car. Very empowering. But then because you got into that debt already, you were just now paying off debt instead of making it grow. And that was the loophole that I had to overcome. And I mean, I only started seeing that late in my 30s that, listen, I have to change my perspective of how I'm using money and how to grow it. Yeah.
So you're on the floor right now, you get to the desk or whatever right now, and from what I'm understanding right now is that there was a work ethic that was needed for you to progress from where you started. What would you say shaped your work ethic? What or who actually?
It's the industry itself, because the industry has evolved a lot from the time I started. Because we were very institutionally based, like it was more institutional clients, and it's moved. And ever since then, they are now more retail clients. So that's a different type of animal from being in the institutional side. What it was, the institution itself, it had its laws and regulations. Look, I'm not going to talk about other things that happened in the dealing desk that I think can be seen at this point in time, but there was a lot of ethics in the way we had to do our work and how we had to present ourselves to people, and definitely not one that was disingenuous to people. Like if you were going to create a portfolio, it was one that is going to be outperforming, and there had to be evidence based on that, like hardcore evidence. That's why analysts get rated. That's why analysts, you know what I'm saying? So that there is that evidence that this is legit. The industry itself. I mean, there were a few other people that helped me along the way, particularly when I started in the dealing desk. Do I mention who's this Lindy?
Yeah, no, go, let's go. That's the part I'm waiting for.
Yeah, so when I started though, it was remember when I started, the finance sector was very much a man's world and very much a white man's world.
Okay.
And when we got in as young black females, it was very intimidating. But I'll be honest with you, with the company I started with, the gentlemen there really protected us from any external things that would discourage us. But being in the desk itself is a different world that we were not used to. Particularly I was not used to. And yeah, it's raw, it's vulgar, it's a lot of things. And I remember there was one lady, Usislindi, when I couldn't take it anymore on the dealing desk because of the way traders were or the emotions running high. And I went off to do a little cry somewhere, and she followed me and she said, you know what? Gule industry le, you need to grow balls. What are balls? She was like, grow balls. And I think that in me, those words, I got back and I changed because I then knew that I had to be tougher in my industry. And that itself is what drove me to be where I am, because I knew I was always going to be going against the grain. And by going against the grain, you were proving that you're becoming better and better. So that's how I started pushing back and not feeling intimidated, but also learning to be a part of the industry as ruthless as it was then. So yeah, those are the things that drove me. There was a lot of ethics as compared to now, to be honest with you. Yeah.
Ooh, it's different.
Yeah, it's a bit different.
Did it do this or did it do this? You know, we're talking about dealing desk, and what's crazy is that there's a lot of retail traders who watch this podcast. A lot of people who aspire to be traders and all that, and I think a lot of people don't know what a dealing desk is. What is a dealing desk? Before we go too far, because I know we're going to get into a whole lot of that now.
The dealing desk.
Yeah, what's a dealing desk?
The dealing desk. So, firstly, the people who were in the dealing desks, and you need to get this. It wasn't people who. I mean, in the dealing desk when I started. There was, I remember Pops, he was a farmer, but his skill in trading was just different, you know? So he had the ability, and remember they handling institutional monies. It's not, it's millions. So a whole lot of people in the dealing desk have a whole lot of skill, and they have different backgrounds.
Okay.
Right? So the dealing desk was fun because you had to make it fun because of what you're dealing with. You know, dealing with money and trading is not an easy thing. And it needs a lot of tactfulness and skill. So you had to create the fun, and but then there was also the very, very down days in there. I've seen grown men break down. You know, I've seen windows being broken because someone lost a trade, and computers being we've seen that
real life. Like,
it's not TV. And when you get exposed to such things, then you realize that you cannot be playing with people's money. You cannot. So that's another thing that just brings up that I need to be ethical. I need to improve in my work. Because it's, like I say, seeing a grown man cry over him losing people's money and I think that's what needs to be there. People need to be emotional about, especially if you're handling people's money. You need to be emotional about that because it's not a playing. This is people's money.
Yeah.
Do you get what I'm saying?
Yeah.
So the dealing desk was a lot of activities. It was fun, a lot of fun, but also very serious. But people in it at that time were taking it. I haven't been in a dealing desk of late because everyone can work from home now and you can trade anyway. But dealing desks, a lot of exuberance. It's thriving people. It's also mentally blogging. Like it can be very bogging in terms of... like I say, handling people's money is deep stuff.
So what's the whole setup of like all that? Is it like, because like right now that's institutional level, correct? So what's the whole setup of that? Money gets allocated to you. Like, do you get allocated? Like, how does the allocation work?
So
actually?
let me explain to you. How it works is, you know, we all pay RAs. I mean, some people don't. And it's fine because now we have the ability to handle our own monies. So at that point, you're paying an RA to your company, retirement annuity fund, pension fund, and that goes to an asset manager, right? That money, the pool of money goes to an asset manager. And then there's a portfolio manager. There's a portfolio manager who then has to decide where your money will go in order to grow. Because remember, you decided, you said you're going to retire at 65. Now that money that comes in, the portfolio managers decide, and then they have to then give it to the sell side, the brokers. And once they've decided, for instance, if they've said, we're going to invest heavily in metals, in the metal industry, they will then go to the broker, and say, we have 50 million and we want to buy a whole lot of metals. You execute at the best price for that. And that's how the brokers come in. And if they say to you, at a certain price, this is where, because, whatever, they'll have their own fundamental mathematics towards what's the best price or the fair price, fair market value, and you have to then stick to that. So the brokers themselves are the ones that then get this mandate, and they need to trade that 50 million with whatever stocks that they were given to trade. So that's how it works on the institutional side.
Yeah.
Yeah.
What myths do retail traders have wrong about institutions? Because, like you said, I think the landscape has changed drastically the past couple of years.
It has.
There's a whole lot more retail traders in the scene. So,
and I also think it's a good thing.
Okay.
Because it's a space where money can be made, right? And when you talk about institution, you know how big I am on people forming their own portfolios. But it's interesting, and thank God that there is this part that people can start trading for themselves. But I think because of that, it created a bit of a huge gap where things just became, slightly dark.
Yeah.
In terms of how they were presenting to people on how they could be making money, which is very different from how institutionals perceive way of making money. Yeah.
You are currently rated. Is it the current rating? Or,
oh no, this is.
Yeah, let's talk about. I actually want to talk about that because I know we were on a live stream the other day and you were talking about how you got that rating, and it was. I was so fascinated. I was like, wow, okay, that's cool. Yeah.
So what happens is, as we had said in that podcast, I was like, I think many people who are selling whatever signals or advice should go through that process as well, because there's just, as I said, the retail industry has just been tainted, man.
There's
and
too many self-proclaimed awards and being dished out.
You know what I'm saying? And I think it needs to clean up a little, because the thing about institutions, we know this is people's money.
Yeah.
You can't mess it up. And I think it needs to be something that ripples to retail clients, people who are doing it for retail clients as well. Oh, so the ratings would be, now you've got your portfolio manager. And the portfolio manager would then want to hear from certain analysts what their views are. So they'll have their own views. The CFA holders, they have their own views, but they also want to know from people who are in the sell side or within analysts on that end, what sectors they could be investing in to grow people's money. So my particular job was then to look at the stock market and come up with the sectors for a 5-year, 3-year projection of where I see them going. So you would then go and you'd present, it would be called a roadshow. You'd go and present, and mostly a lot of the asset managers are in Cape Town. So you'd go to Cape Town presenting on mutual, your views. And I mean, they get a lot of people that present to them. Then at some point when they see that this one's views seem to be coming into fruition, they would then request for you to come. So when that happens, the Financial Mail has a survey that they give to portfolio managers, and with names of analysts, and they would then rate that this is number 1, 2, or 3, or 5. I think it's up to 5. You get the top 5, and then you get your top 3, and then there's the one.
Sure.
So you get rated by the asset managers.
Meaning that your chart work was just too clean.
Clean, and your projections were good.
Sure. Yeah.
Because they've got their own views, but they're also following your projections. I'd be asked as in, okay, this is my view, but where do you see the rand going? So if I take this route, where are you seeing the rand going? And then you'd have to say, look, this is where I see it going.
And you can't just say I'm buying or selling. You can't
no. You just it wasn't a buy or sell at that point. It was your views of where you're projecting, and with that they would use that information. So they'd have a few other people saying it. And with the levels, I'll be saying around this point, I see this type of movement there, but if it doesn't get there, then there'll be, a drop. And so they would keep that in mind. And if your views are aligned with then on a constant basis, they would then rate you from that aspect. Yeah,
Sure.
it wasn't brutal. You just had to be very clued up with the industry.
Yeah.
You had to be very crystal clear with your views and keep them abreast. In other words, if at all your views has changed, like, something's happening, this might not pan out, but if at all you are invested at this point, you probably lose this amount percentage in your portfolio, but you can regain it. So, that type of talk.
Sure.
Yeah.
You spoke about portfolios just before we started. Why the passion for people building their own portfolios?
Because it's one, it helps you with your relationship with money.
Mm-hmm.
Two, it helps you be able to create generational wealth.
Mm-hmm.
And I think those are my two key points of why I would love people to build their own portfolios, because we have access to do that. At first, you would rely on an asset manager to do it. Now that there's retail client, you can now trade for yourself, and there are brokers that offer that. You're able to manage your own portfolio, and by doing that, and you don't have to have gone to school for that. Do you get what I'm saying? You just need to be tactful on how your views are on where you see shares going. And building a portfolio is something that helps you practice on how to retain your wealth. Because I feel trading sometimes, it doesn't necessarily do that.
Okay.
But building a portfolio at least helps you save significantly.
But now, what if you've got somebody sitting at home, is like, okay, Ms. Gama, I hear what you're saying, ne? But right now, I've only got even having spare 500 Rand, it's a reach. But right now, all I can spare in a month is like 500 Rand. What would you suggest to someone in that position?
Oh my God, that's a lot of money.
Oh, ooh, okay.
All right, there's shares that are trading for 1 Rand something.
Yeah.
You can have at least 2 types of shares with your 500 and let it run, and you keep building on that and practice building on that.
Okay.
Do you get what I'm saying?
Yeah.
And the thing about building your portfolio, it's not like CFD trading where you can blow it. It grows.
Okay.
It is, what is it? It's not the multiplier effect, because that's more CFD related, but it is, what's the word?
I think I know compounding.
Compounding, yes. It's a compounding effect. And if you can practice that, because when you see that money grow, that 500, doesn't it encourage you to put another 500? You're not blowing it, because that's what scares you. I'm suffering. I don't want any more than I'm blowing my money. But that one is constantly compounding. So it's more interest than what you could get in the bank. And you're gaining from the movement of the shares. Of course, if you invest in something that has that upside momentum, because remember, with investing, you're only buying.
Okay.
And you're only selling what you have in your possession, in your portfolio. It's not like the CFDs where you can take it, you have the opportunity to sell and still make the money. But I've been saying to my clients, if you really want to break from that, from the whole CFD trading thing, and still obtain or retain that excitement of investing, you need to start just getting into equities themselves. Because that can revive the love if you've lost the money in CFDs. Because ideally you want 2 types of portfolios.
Okay.
Your CFD trading, but also, if you can, just take the proceeds of that instead of blowing the money from that. Because with CFDs, once that money gets bigger, you're thinking, I could take more lot sizes, I can double this, I can, And the mentality of, okay, I've got it here, let me put it into a portfolio where I could get compound interest is such an interesting path to follow in one's financial empowerment. And the reason why I speak about portfolios a lot is because I'd really love a lot of people to get into the space of where you're building generational wealth.
Sure. That's powerful right there.
We need to.
Yeah.
Particularly Black people, as Black people.
Yeah.
We need to learn to build generational wealth. And CFDs, unless you use it very well, and unless you're very tactful and skillful in it, you may not see that opportunity to do that.
What was your role on the dealing desk? What I want right now, I just want you to walk us through a day of like you get to the office,
All right,
you do this, like just walk us
Taking
through
me
a
back.
day. Yeah, take us back with you.
Okay, so how I would normally start, the dealing desk would be closed off. Obviously, there's a lot that happens. So you'd get in the morning, get your coffee. Everyone, would be there from 5:30.
Oh, really?
Yeah. 5:30, you're there because now, as an analyst, you also want to start right. They used to, I don't know if they still are morning notes where you're then telling your clients that, okay, this is where you see the market going for this point, this and this and this. This is what the US has done. This is, this is what economic indicators that may affect. Well, so you write your morning note that then, as an analyst, that the traders then use to speak to their clients.
Okay.
So it would be pretty much like a U shape, like a U shape like that,
Okay.
and then the middle part.
Okay.
So then you get your head traders there that get the money, and they would then allocate it to the other U part, like the other traders. So they would say, Nobile, you need to buy, and literally it would stand up, Nobile, I need you to buy now. I need you to buy 2 million of this share. And you need to execute it well.
Yeah.
Because if you don't execute it well, there are other brokers, the money could be taken to other brokers.
Yeah.
So it was very much that vibe. And as an analyst, they would say, okay, at what price do you think it's a good time to buy now? And then you'd be like, nah, not a good time. And you're like, okay, so let's wait for. So that was a dealing desk. A lot of instructions given, looking for a right time to be executing trades. And yeah, that's very, as I said, exuberant.
Yeah.
Very exuberant.
Yeah. No, that's cool. And that was basically the bulk of your day, basically.
Bulk of my day,
yeah.
trying to figure out where the market's going, and when is a good time to be
What goes
entering.
into that, trying to figure out where the market is going, actually? Because I think a lot of people actually, I've always had people, and I think I've said this several times on the podcast, I've had particularly girls, I'm going to be very specific with this one. Girls would come up to me and be like, hey, Ngobile, hey, I want to learn this Forex thing. Where can I start? My first initial question to them is like, do you have time first? Let's start there. Because I think a lot of people look to this thing as if though it's easy, we see the guys with the cars, the whatnots, all that. They see people are doing well. It's like, yeah, I also want a part of it. And I get it, for girls to get their independence, I'm pro that. But I think a lot of people look at it from a point of view of, I'm just going to go do that. And then within a couple of weeks, I'll be making money. And then, yeah, so what actually goes into like you... At that point, like you actually deciding, or not finding a direction, but like deciding, okay, my conclusion for the day is that, or for this particular point is that the market is going in this direction. What goes into that?
Research.
Yeah.
Studying the market itself with a whole lot of information that happens the day before as well as for tomorrow. And so you consolidate all of that, because we also kind of build financial models in the process. So if it's in line with your financial model, okay, this is probably not going in this direction or not. So there's a lot of information that had to be put in, economic information and how the market is behaving, in order for you to come up with some kind of synopsis that will guide traders. So it wasn't a quick fix. You had to know what you're doing. And it's nice to see everyone believe they can trade. But there's a lot that needs to be done to be able to do that. And I think if you start off with that mindset, you're going to become a really great trader. If you start off with make money quick mindset, I think the relationship will end sadly with you, and you'll lose the love of actually wanting to trade, because it is a very beautiful thing to be able to know how to trade and trade well.
That's true.
You know what I'm saying?
Yeah.
And that's what you have to. So you have to start off humble with your journey, and not start off with I want.
Okay.
You know what I'm saying? Start off. I want to have a house. I want to start off with I am learning something that I do not know, and I will make mistakes in it, but I will better my mistakes. And this is it's the same synopsis on when I got into the market. those going against the grain was something that always improved us, you know, and I think when you start off with a very humble mindset on where you want to begin and know and have, you know, ridiculous times, you're like, I'll get to know this. In the next 5 years, I'll be an expert. Don't be in the next 2 weeks, in the next 3 weeks, or in the next 3 months. I'll be an expert. No. I mean, I've been an analyst. I've been an analyst for 15 years and 6 years trading. I still get it wrong too. You know what I'm saying? And if I am, why wouldn't you as a newbie get it wrong?
I mean, maybe they found the holy grail.
And yes, but you see, you find it, but can you maintain it?
Sure.
You know, can you maintain it? Because if you can, then you're really the 1 percentile. Especially in CFDs.
By maintain, what do you mean right there? Can you clarify that? I understand what you're saying, but I feel like we need to dig that one a little bit deep. Because like you're saying, if you find the holy grail, can you maintain it? What do you mean by maintain it?
Can you consistently be good at it? And be good at it is you will accept your downfalls and you will improve in it. It won't, you know, you won't let the horse kick you off. You'll get back onto it. And in that, can you maintain the capital that you're making all the time? And when you get the capital, what are you doing with it? What are you doing that's perpetuating it? That's making you even more money? Do you get what I'm saying? So it's not just I'm making quick money. It is where else can I make it go further that's less riskier? So you have to think of other avenues. For instance, if you're very good with CFD trading, I go back to my portfolio building. The profits that you make, what are you doing with them? Are you reinvesting them in something better, or are you back into it to blow it all up again? And I think the mistake is not knowing that once you have that capital, what do you do with it? And the mindset is, do I get the Lamborghini? Lambo? What is it? Your cars?
Tell me about your cars.
I'm more property person.
Oh, you're a property person. I was about to ask, do women not like have ambitions of driving like Lamborghinis and whatnot?
Oh, well, personally,
no, not you.
That's not my ambition. No, I feel like it's such a waste.
I mean, yeah, but you know, that moment.
Yeah, it's nice. And then, have you heard pothole, one tire? What happens? Apparently, they take them back because obviously you get it and you hit a pothole. You know where? Hit the pothole. The price of a tire for that. Most of I know. I won't mention a lot of things, but I do know people who are who sell the Lamborghinis themselves. They say every time there's something, it's been returned because they can't maintain the price of that.
Sure.
You know, if it's a Porsche, it hits a pothole, 30,000. What can you hit 2 times? Service, huh? If you cannot maintain that, you shouldn't be owning it.
Yeah.
And why are you doing that? Why?
And this one stresses you.
It stresses me. And each for their own, because it's also nice to, some people, for them, owning something like that is valuable. I'm very much on how do we grow everyone else behind me? Like in your family, if you were a skillful trader, how does the rest of your family benefit from that? And not have to die and pay your bills or your debts. So if you have the opportunity to do that, which I think we all have, we need to think back as well and give back too, and not just think as from China. And I think if we move out of that mindset, you move out of the mindset of making Forex sound scammy or, because as I say, there is money to be made.
Yeah.
There really is.
Yeah.
But it's not a quick and easy thing.
No, it's not quick. Patience Oh, this thing of patience, Mara, we'll get into that. You've been live streaming with MJ, joining MJ on his live streams lately, and I've been tuning in and watching, also in like preparation for like today's shoot as well. You recently said you trade on rumors and close on facts. What does that mean? Can you break that down for me?
So in most cases, for example, let me give you I'm trying to find a typical example. So, let's say an economic indicator that comes out. Powell spoke, right? On Tuesday. And then it would be a bet with traders that, okay, I'm thinking it's going to go this direction. It's going to go that direction. Traders have already traded before on the perception of before he's spoken.
Okay.
And once he's spoken, then people close their positions. But then that's when the retail just say, oh, this is time for me to get in. It's not.
Get deeper into that one. No, it's ridiculous. But it's okay. So basically,
and institutions catch you on that because that's where they're like, they come the retailers. They're gonna be buying our sales now.
Because right now we know that's widely sold as fundamental trading, of course, right? It's called fundamental trading, basically where retail traders come in when like at 2:30, now we are going in at this exact time and all that. What are you saying now? You're saying you're bringing other news now.
So institutional traders would be very much on, they prepare. Our mindset is to prepare way in advance before the fact happens. So you need to figure out what is your strategy before it happens. So your strategy would be, okay, fine. If, for example, okay, so with Powell having spoken and everyone was like, oh, he's going to be dovish, blah, blah, blah. And if it's dovish, then this is what's going to happen to the dollar. So if you already trading before he speaks, as an institutional client. So your research has been done maybe 2 weeks. You know when he's going to speak. I mean, that's information that's widely given there that on this date. So you're preparing for that. And when he does speak, your position's already known. So if you've lost your money because of anything, you're pretty much sure that you're going to make it up when the retailers come in. That's the general thought. We would say, okay, well, if I lost it at the time and my conviction was wrong about how I perceived his announcement to be, I know the retailers are going to give me an opportunity to, you can double it up, but they sell on the anticipation, well, they get into position on the anticipation and sell on the fact.
Sure. And the fact in this case is that the retail traders are coming in.
It's like, literally, it's like, banged. It's like, did they come? You know when you're like, they're here now.
Yeah.
So, yeah.
So do you think, in terms of retail traders and institutions, we have two completely views on like what fundamentals are?
We do. And remember, institutions they have a whole lot of analysts that back them. I mean, when I was working for Standard Bank CIB at the time, analysts were literally in a fishbowl because no information was supposed to leave for compliance reasons.
Sure.
Because the institutions respect that type of information because, I mean, for compliance reasons, if it's leaked out. So when your analysis goes out to the trading desk, it's foolproof. Analysts have checked it out. They've signed it off. They're happy. They're like, are you happy with your view? You know, it's not it's well thought out. It's not I'm thinking, you know what I'm saying? So there's a whole process towards it which is why, and at this point, like I say, if they're wrong, then they know when the institutions are coming to make up that money. I mean, when the retailers are coming,
Sure.
So if you think that way, you then start trading in a different.
Yeah, I was genuinely about to ask that. Does this mean it's over for the retail traders, or
no,
obviously not?
No, it's just it's a different way of seeing things and of entering the market. Different timing as well.
Yeah. Can markets be seen as an emotional system? Because I think there's this whole perception of like, you can trading without emotions, leave your emotions at home, we don't come with your emotions to the charts, whatnot. But we're human beings, and human beings are emotional beings. So I've always wondered as to is it actually practical to think along those lines of no emotions, just trades. Obviously, grow the balls, and then
we're not wired that way.
Yeah.
When I trade, I have two different scenarios.
Okay.
I don't stick to one particular scenario, which is something I learned in institution. So if this happens, this is where it's likely to go. If it doesn't, this is the second way. So by having two different scenarios, I believe it removes emotions. The emotions really get in when you are in the trade.
Okay.
And that's when you're trying to control them. But when you've got a clean strategy, I think that removes the emotion, and everyone has said that. But people get stuck in wanting one particular strategy to work. And I think when you're trading, you need to have two types of strategies. And if one fails, you can get in because you've analyzed that, okay, if this fails, this means this is the result of. And then you trade on the result of, and not be adamant about your strategy coming forward. So if you have two different strategies and the first one doesn't go through, then you have the second one. I've seen how I was saying to MJ that, damn, retailers analyze way different than I do. Way different. And it's interesting because, I hear the terminologies and everything. I'm like, it's improved quite a lot, but it's just by doing that, you allow yourself to make mistakes because you're human.
Yeah.
Right? But it also then, it's a soft landing if you've made a huge mistake. Do you get what I'm saying? So let me give you an example. My typical analysis of when I look at something, I'll be like, there is a very possible scenario, and then there's the alternative scenario. And if my possible does not go through, then I click back into my alternative, because from my analysis, I then know that, okay, that meant there's a complete, what we would say, a change of strategy. I hear the words are now change of structure or something, to that effect. Yeah.
Okay.
And for me, it's always from optimism to pessimism. That's and in my mind, I'm like, okay, here comes pessimism or here comes optimism. So there's always two strategies that I work on that helps me to benefit. One of it is going to kick in.
Okay.
Do you get what I'm saying?
One of it is going to kick in. So it's not per se that, okay, let's say first strategy goes in, your trade triggers. It goes in, but it doesn't go your way. And then you have a backup strategy where it's like, okay, this didn't go my way. Is that not perceived as revenge trading on any level?
No.
Okay, explain.
Because you're not now getting it. Because remember, if you have that alternative scenario and it goes against you, you're still waiting for your strategy for the alternative scenario to kick in. You don't immediately go, oh, okay, the alternative is getting in.
Oh, okay.
Do you get what I'm saying? So you wait for the alternative to kick in.
Yeah.
Then you're like, okay, so that was a failed structure. And a failed structure means the second part of it, because there's only two ways it could go, right?
Yeah.
And that's a nice thing about the market. Okay, three ways. It either goes up, down, or sideways. And if it's sideways, you're thinking, oh, indecision, I need to change my analysis. But in one of your two strategies is going to kick in. But in that, your first possible scenario, you're gearing yourself that, okay, the possibility is it will go there. That's my first pick. But if it doesn't, and you've got your reasoning why. And I always explain in my analysis that the reasoning why I see it going there is because A, B, and C, and B, C. But if it doesn't, then the second would kick in. And the second then means that this is what's going to happen.
Yeah.
So you're not revenge trading. It just means your second strategy that you've thought out is going to kick in because of that.
And it's not a case of, oh man, it failed. Okay, let's quickly do this now. It's not that case.
Before the trade happens, you've got two strategies already. You don't develop one during. No.
And a lot of people do.
I've done it too. I'm like, okay, wait. You know what I'm saying?
Yeah.
I've always just failed with that.
Oh yeah.
I've failed. I'm just like, stick to your alternative. And even if the alternative is so far off from, your possible, there's a reason in terms of the levels that you're getting in. You obviously have a reason why you have the alternative there, and you need to stick to your guns. Don't get swayed by this one who is a super trader who does it this way.
A self-proclaimed super trader, Mara. Anyways.
How do you formalize this, Kotaye?
Jokes.
No, but how do you formalize it? And the thing is, and that's, man, being humble takes you far.
Yeah, that's true.
You get what I'm saying? It makes you compassionate to be humble. And you can't fool people like that. This is people's monies, guys. You know what I'm saying?
That's true.
And we need to be honest about the environment. And I think when we get to that point, and that's why I'm like, if you feel like this part has been thoroughly disingenuous about how the market moves, for instance, the retail, not retail rather, but the CFD space, then there is another space you can get in. I mean, there's so many other, you can get into equities, ETF, you know what I'm saying? It's not just one part, but I think we're in such a desperate economy and desperate times that our minds are so stationed on we need to make quick money in order to provide, and not on how to make sustainable retained capital that can perpetuate or compound. I keep saying perpetuate, compound.
I want to talk about your trading right now. I want to talk about the good moments in your trading, because I think over the years you've had quite some brilliant trades that you've can I say executed, or rather, can you just walk us through just a few, like some of your trades where you look back on your career and you're like, yeah, no, there I killed.
Yeah. Here's the times when I don't kill. So you need to know. Because and it's the truth, and I'm being really honest.
Yeah, that's okay.
The CFDs have hit me as in like, you know what I'm saying? I'm like, okay, let me just stick to my equities. But the ones that I have, and the thing is with me, and what I've always said is I don't like dabbling, especially when it comes to trading CFDs. I have the 5 ones or the 3. I had 5, now 3. Then I'm like, these are the ones I'm going to master. Okay. I don't try and make a quick buck on anything, or once I said,
why switch from 5 to 3?
Because then I realized 5 was too much to concentrate on, and I was not really developing a good strategy on 5, and I limited it to 3.
Okay.
So 3 was for me to get to know you know, I'm like, okay, so what's up, Gold? So how do we get to know each other? Yeah. And now I can Gold and I have a good relationship, Shem.
Guys, Moxima and Gold.
Let me just say commodities in general.
I know, Moxima and Gold.
No, I've developed I finessed it, and I got to know how does the sentiment and ubiquitous sentiment in gold, how is it how is it functioning? Okay. And that's the first part people must think of. Choose one, and you know, because the reason why I'm saying gold is I've made my fair share of money with gold. Where you just let that CFD run, man, and you're thinking, okay. Because I've studied gold's movement. Okay. It's like being in a relationship. When you're in a relationship, you want to get to know the person, right? What's their flaws? What's their, you know, how do I keep this relationship going? So that's how you need to. Don't try and master. Try and, you know, other traders say they want opportunities everywhere. Okay. I say keep it to 3 and get to know that relationship with that and how it functions. Then you can master how it thinks, because then there's something in you that you see that no one else can see, because they're dabbling in too many things. So gold has been one of my best. Right now, maybe not, because I mean, I've been long of gold for some time. Because of my projections, I could tell from studying gold where it was going to go. And I think my top side for gold at that point in time was at 3,440. It was trading at 2,200. I was like 3,490 actually was where it's going to start fizzling through, because I followed the trend and what it had done previously with the background of my studies, CMT, all of that. And knowing that, I stuck to my guns with that. I was like, it's going there. And I could tell from the charts, I formed that relationship of knowing that, oh, you've got a tendency to do this when this happens. Okay, then this is how I have to react. I got to know gold. Now I'm on silver. I look gold.
Yeah.
I was like, good to know you, my buddy. Here.
Yeah, I was in silver. Also, I was also going to ask about silver because I know, like was on the live stream. I think MJ was saying that Moxima and gold, guys. But then you also mentioned that, guys, people are sleeping on silver.
No. Silver is now my thing.
Oh yeah.
Yeah, I've started a new relationship with silver.
How's that going? Ooh, look at you blushing.
Silver. And also, I was explaining to MJ that there is it's a very old analogy which is known as a gold to silver ratio. Have you heard of it?
No.
They used to use it in ancient times, actually.
Oh, okay.
And that's how. So gold and silver track each other, but silver tends there's going to be one that's a lagger, and obviously silver is not a safe haven. It's not a safe haven type of
like commodity
that you can trade. But gold has that because it's, for some reason, I get the Indian festivals on gold. So the gold is kept as a Krugerrands, gold is kept it's a very huge commodity. But of course, it's not going to go up for forever. But when I started, when I was a baby, gold was trading at $400.
Really? When you started?
No. I mean, not when I started trading it.
Oh, I was like, yo. I'm like,
just, I got my jet happening. I'm going to Cape Town. So, no. And to see it head to these levels is that's why my commodities, one should at least get to form a good relationship with commodities because they're pretty much predictable.
Yeah. Oh, yeah?
Yeah.
Do you know that South African gold traders are like feared by like the world? Online social media, people fear gold traders in SA. Like, they're like, guys, we've seen people trade, but not like SA traders. We've seen people trade gold, but SA gold traders.
What do they say about SA gold traders?
No, it's just like, I think, I don't know what it is about our landscape or where we are right now, where the industry is right now, but the way we trade gold, and when international guys look at South Africa and they're like, no, but these guys...
Remember, we were now the gold reserves, and they have to dig a bit deeper. We were one of the biggest exporters of gold. And you remember, Johannesburg Bill is based on the gold rush. So it's in our DNA, there was a gold. You know what I'm saying? So many people would leave KwaZulu-Natal villages to come and work in the mines for gold.
City of gold.
Yeah, it's in our DNA. So if you're inclined to trade, it's because that's all we ever heard.
Sure.
Golite, you know what I'm saying?
Ooh.
So as I said, but there are other commodities.
Yes, correct.
And I got to say, if you go to Dubai, it's oil. They probably trade oil better because it's in their DNA to know about oil or any oil-based, kind. So we're in the commodity space where it's in our DNA about gold.
Yeah.
So I think when they say that South Africans are like that, is because we're just used to this gold situation and gold commodity, which built the country in general.
Sure. I never thought about it that way. That's actually such a...
It's deeper.
It's very deep. It goes far deeper.
It's far deep, yeah. Your parents always talked about it. So...
And I bet you right now, people watching this, people are like, oh, that makes sense. No one in Tandi gold
whatever country that exports, they would do better in that because they hear about it a lot. It's in their peripherals. You know what I'm saying? So that's why. I'm evident. Gold, yeah.
Yeah, ne.
Gold, but now, my relationship is a bit rocky. It's been trading sideways. I don't like volatility. I don't like volatile relationships.
Toxic.
That was right. Let's end this.
Yeah.
And then silver comes popping and it's like, hey, boo.
Something shiny.
I'm like, you see you. We can grow together.
Yeah.
You see, if you you take trading like that, as humorously as we're saying it, and you understand, then it becomes more than you trying to make a quick buck.
Sure.
And if you're trying to create sustainable wealth, it's more than wanting to make a quick buck.
Sure.
And it's you have to remove yourself from seeing all these fancy things. But if that's your currency of showing success, then I think sometimes you may fall short with that. It may fall short with your trading because of that. Because you're not thinking the now, you're thinking the future, which, as everyone says, time is an illusion.
Yeah. What makes a good chartist? Because earlier on you spoke about how you've seen retail traders analyze the market. You're like, oh, this is very different.
It is. It is,
Yeah.
but it's not wrong.
Okay.
But it doesn't tell a story. That one. Okay. So, for example, I'm going to use gold again.
Let's go.
A good chartist has a very they can read, for instance, a monthly chart very well and be able to project where the monthly chart is going to go, where the share of the monthly the monthly chart of that whatever share or commodity or currency is going to go. First point of reference. So you know where the future of this is going to go based on your analysis. And then in between, so you've got the story of where it's going to go. And in between, you're then creating your strategies. So you have that vision, and then you're trading the now to get to that vision. That's a good chartist. Not something that's going to happen in 5 minutes or 15 minutes. Because then it's an in and out game, instead of a rolling over game.
Yeah.
You know what I'm saying? So if you're able to project very well, with me being able to know that I should stick my guns with gold because it's going to go to 3,000. Well, it went to 3,500. I knew what the story was, where I saw it was going based on the monthly chart. That helped me know when to be reloading because I see it going there. And every time it was getting to that finish line, I was like, I'm getting there. So you need to be able to have that projection and then trade it in between with whatever time frame that you're looking at trading it.
Yeah.
It has to tell a story. You need to know why you're getting into the position. Don't get in because someone said it.
Yeah.
Or because the signal said it's time to get in. Do you get what I'm saying? You have to know your story. Why am I getting into this? Why am I trading? And that's the reason where I say you need to concentrate on at least 3 things that you're going to do well. Master that. Get to know that relationship with that and how you behave when trading it. Because if you have too many things and you're following signals, then you lose the focus of building a relationship or knowing how it operates.
Yeah. You use indicators.
Yeah.
Have you always used indicators, or was that something that got introduced to you? Always.
Yeah. Listen, the way I analyze is very simple. I do not.
I noticed. I saw.
I don't
and
put
I love
frills.
it. I love it.
I analyze and and you know what you're doing when you're trading it. Analysis should never be complicated. It should never be like, whew, this is just too much. Now, a lot of my clients say, you could read on social media things. I'm very clear and crisp on where I expect things to go and the direction. And I have 2 scenarios of if I'm wrong in this, there's that. It's as simple as that. In my simplicity, I got to and there's a lot of indicators out there.
Yeah.
I think it was at some point 10,000.
Okay, I didn't know there was that many. I knew there was a lot.
Or was it? There's.
Yeah, I know it's a lot. It's a
lot.
It's a big number.
I decided I was going to, and I do use a few in the background, but I decided to master 2 particular ones. It was the stochastic and RSI. I know that you can't tell me nothing about that. And I feel they helped me with my particular trading because I've mastered how to literally analyze the RSI itself. So it's not just about the 2080 vibe.
Yeah.
It's about what is the RSI doing itself that's giving me an indication of where this is going to go. Because without my RSI, I'm not too sure. It helps me with my breakouts. And they were actually teasing me this morning with MJ and where there was Souls, Souls.
Souls, Souls was there.
Yeah. So we had a little poll and he says, which I see with a lot of retailers, they like that whole sell at the top and then go. So they wait for the move upwards. I'm such a breakout person.
Oh, yeah.
Like for me, my signals are on breakouts and not necessarily where. Okay, it's on a few things. Like I say, there's a little. I've created my own indicators as well that I use.
Okay.
That help me, particularly studying. That have included both the RSI and the price chart, and what the projections would be based on that, and. And that's another thing that you need to know as a trader. Are you a breakout trader or a reversion trader? Okay. A reversion is where it goes back to where it was at first and then you take on the position. I'm very much a breakout person. Like it has to breach a psychological level for me to know. So I'm not trying to catch it at the top. No, I catch it when a particular support is breached, if it's falling or a particular resistance is breached if it's rising. Yeah,
because when it comes to indicators, I think a lot of people's complaints, we've heard this, personally I've heard this over the years, people are like, indicators are lagging, whatnot, there's that. But how do you balance your instinct with an indicator, using an indicator right now? Because I think you need to find a balance right there.
There is, and that's the whole forming a relationship with something, right? Is that even when your indicator falters, you're just like, nah, I know this thing doesn't behave like this. You know what I'm saying?
Sure, yeah.
You just know that from the price chart, I know looking at the candles, this is just an anomaly. It's not, because there's some indicators that work very well. And I use some of them and I test them out. But like you put, the correct word is intuition. How do you need to master your intuition with one particular thing, which will then replicate in others.
You're saying stuff right now because you basically just said right now you need to master the indicator, and I think a lot of people don't approach indicators like that. People think, no, I'm gonna open a chart, I'm gonna put in this indicator, and then when it says buy, I'm buying, I'm done. When it gives a signal to sell, I'm selling, I'm done. And right now what you're saying is that no, spend time with that indicator and then see how
spend time. The indicator and the price chart itself, don't just look at the indicator.
Yeah.
Because the price chart is telling you how the traders are feeling. Every little candle is telling you how traders everywhere in the world, worldwide, is feeling. So you must never ignore what the price chart is saying. The indicator must always come kind of like secondary. Because if you know what the price chart is saying, you'll know if there's a false break in the indicator.
Sure.
Do you know what I'm saying?
No, I'm hearing you.
Then because you just like, and you know me and trend lines. You guys always tease me about my trend line.
I know, not me. Maybe the choppers.
That's my choppers are young teaser guys. The sweater hat. But that stuff has worked for me over the years. And that's because I decided I'm going to master one particular thing and not too many. And now I get people, banks saying, can you educate people with that particular way? And it's the most simplest way, but people don't like. But people like the more complicated, the more it feels. Right, yeah. Right, this one's gonna work.
Yeah.
When it is so simple, it's a simple thing. Technical analysis it's not really difficult. It's the analyzing. It's the knowing what's going to happen next. And once you know something, okay. So let's just say you and I dating. You know what my morning routine is, right? Or you'll say, hey, no, babe, likes her coffee like this. If you master one particular Bitcoin, whatever. If you master the movement of what Bitcoin, I'm not just saying that because history also repeats itself and so does behavior in the market repeats it. And by doing that, you can master what the majority is thinking that you can either go against or go with. But that's the thing. You need to get to know what it is that you're looking at.
I want to talk about, you spoke about mastery right there, like mastering as particular elements or, set of things, and you choose. But what happens during the process of mastering something when things aren't working out? Because I think that's where a lot of people tend to lose a lot of faith. Because, I've mastered this, but now it's not working anymore.
That's why I've got 3, Angisho.
Yeah.
So if the one is not doing the thing, I
So
move on to my next one. I would say, so like I did, it was gold.
Yeah.
And then I like trading the rand.
Okay.
USD, ZAR.
Yeah.
I've mastered that too. And my third one, I've just been doing the 2 now. But if that one seems as if it's not doing what it usually does, performer. And I then go to the second one that I've mastered and see what it happens. And if they both not, I take a trade. It's okay to take a break. I'm done. Let me just take. I'd be like, I'm done with trading I'm not going to trade for a month. Because it's a nice mindset. Because also it makes me refresh my mind. Because you can get bogged down by seeing these charts and what's happening on a daily basis. And by taking that break, it's a fresh new eyes looking at it in a different way, but knowing what its behavior is.
Yeah. The Dow Theory. Yes, I know you've mentioned it quite a lot.
The way I love it.
Yeah. For the sake of the viewers, what is the Dow Theory? Because now I was present the day you were busy explaining.
Simply put, and you asked such a good question if it included Elliott Wave.
Yeah.
And it does. And I think it was probably the basis of how the Dow Theory was formed. And the Dow Theory in simple form is that when a trend goes up, it inevitably becomes steeper over time. And can you see how it helps when you have that concept and you're able to draw and to draw that Dow Theory, that every time when an upper part is breached, then it's steeper. And then you draw your trend lines again. You guys, you make me now I'm so shy to say trend lines.
Yeah, no, people have been judged in the space for using trend
I'm
lines.
so judged. I'm like, guys, I like trend lines. So every time the upper part is breached, it becomes steeper. That helps you to retain your position.
Okay.
People must be able to have the heart to retain positions and not get in and out the whole time.
I'm listening. I'm hearing you.
Can you see? So it's in 3 phases. The third phase is usually the juiciest phase. It's like candles, up like that.
It's just going straight up.
But you best know that those straight candles, institutions are coming with the sells. So they're selling every time it's going up. They're selling on your. So you stick around, and at that point when you can always tell when institutions are coming in to sell, because they'll push it up, so that you feel like the retailers feel like, this is going up. This is going up. Then they sell as you're busy buying. Then the third phase is the one that says you need to keep an eye on this, because this is not going to last too long, and you also need to start buying on the upside, because it could go to the fourth phase. The fourth phase is a bit ridiculous, but every time it reaches a third phase, and for as long as it's still in that third phase, the minute there's a turnaround, you need to get out. That's what's helped me.
Sure. What is market psychology?
It is.
And how does it affect decision making?
Market psychology, do you mean for an individual or as a general market psychology?
General market psychology is what I'm asking. Let me ask this before my question. Does it make a difference how I'm asking the question?
I'm trying to think if it does make a difference. Yes, it does make a difference because there's your own psychology, as you may know. I think that would be your personal. So you're right. It's just a more general. Market psychology is quite simple, but it's just you need to be able to, as I said, there are only 3 directions a market can go. 3, but can you see how complicated it is? 3 simple directions, but we still get it wrong.
There's only 2 options, a buy and a sell there.
Got that? We still, you know what I'm saying?
Yeah.
And market psychology is being able to, I keep going back to having to master one, because there's different market psychologies for every commodity, because it comes with its own stories. What drives it? That's when I say get to know it, I mean exactly that. What makes you go up? The fact that it's, let's say, gold. The fact that the geopolitical, tensions. The fact that the dollar has been doing this. What makes you go down? This and this and this. Once you have that, when you know that, you understand what the market psychology is. So it's not just studying the market psychology. It's what makes it psychologically do that. Am I getting too deep?
No. Go deeper. You're not deep enough.
So it is, as I said, so in getting to know what you're trading, you need to understand what factors drive it and what on the upside and what factors drive it on the downside.
Yeah.
That's the first point of reference.
Okay. What... I don't want to skip over this the psychology bit, because the way you made me rethink the whole question, because you asked me, are we talking about psychology or are we talking about market psychology?
Because there's psychology, market psychology, and then there's your psychology and how you trade.
Yeah. And I think that's something where a lot of people feel like that's where a lot of people feel like they are losing the most with their own personal psychology.
And that's what... It's not the market that's making you lose money. It's your psychology in the market.
Yeah.
And man, I've gotten to know myself a lot trading. I've gotten to know what my weak points are. I'm a very impatient person who's become patient now. It's changed me. Because I understood my psychology when I traded, and what my psychology did that was making me lose the money. We were just talking it just before I came, and I said, all of us, we don't really know how our brains tick.
Yeah.
But if you start off by being very honest with yourself on what are the things that really trigger you, just even at home, like when dogs bark, especially when you're trading. I know there's a time when our dogs, every time we traded, I felt like they irritated me. If I heard, all of that. And I was like, but why is it that's irritating me? And it then made me realize that I'm a person who, A, B, and C, I'm not going to mention in the personal part. And I had to then change that to think that, if I change that, because when this happens, I get irritated. What if every time when I get to that point, I take a break, I breathe, and I'm like, you headed back, you're clicking back into your bad behavior. You're clicking back into your bad behavior. Then I'm able to, that's the psychology of now changing the way I trade. So it's not just about your trading. It goes back to how you treat yourself and other, things around you.
What are the mind games that traders face in real time? Because I think, and I know this also ties into the psychology bit a bit, but like, what are some of the mind games that traders are facing like in real time?
That they can make money immediately. That is that's a mind game that one pressurizes you to do something that you cannot at that particular point in time. And because of that, it creates other little multiple subcategories in your mind. But that's getting to know yourself, your psychology in trading. And as we were saying, that's what I was saying, that I think in most cases people don't understand what we spoke about ADHD. Yeah. At some point, I didn't even know I was that. But that, knowing that I was that, I struggled with that. I knew what would be my mishaps when I'm trading. Because I tend to be A, B, and C because of my ADHD. And I lose focus. I mean, you could talk to me and then I'm just like, yes, see that day. I'm like, okay, stay focused. You know what I'm saying? Because I can move.
Yeah.
My attention span is very short. Because my mind, I know this for sure, that my mind, like it overworks. Even when I'm sleeping. So as a result, I have to take sleeping tablets when I sleep. Because my mind is overly working. And I know that. So when I know that when I'm trading, I'm like, you overthink. Don't do that. Calm it down. Okay. Now we're calm. You see what I'm saying?
Yeah.
But at first, my mind played tricks on me. I was like, yeah, this is all of that noise that made me lose money or that made me gain it and then lose it again. So there is that psychology that's a very broad-based psychology that's out there. But when you then start really defining what are your habits in this, you'll see there's so many things that you get wrong that you do that happen in your personal life that you're doing in trading. The honesty about yourself is where it starts.
Yeah. I mean, I think also trading is like also considered like one of the toughest professions in the world.
Yo, they say it's that.
Yeah.
It's been flight, air flight.
Air traffic control.
Oh, air traffic control.
Okay.
It's the first one.
Okay.
Moving apparently is one of the most, well, you mean in terms of career.
Yeah,
but,
in terms of career.
Okay, fine. But that's high stress.
Oh, moving.
Yeah, they said moving from one.
Yeah, moving is a bit
don't try and
stressful.
trade and move. No. Take a break.
I think that's the reason why I'm still chilling here. I've actually wanted to move for a while now. And I'm
it's going to affect my trading.
And the thing is, the thought about just moving, I'm like, nah, you know what? I'm okay with it.
Yeah, and so imagine you being a trader. It's not a simple thing. But if you can master it, man, you know what I'm saying? And the fun thing about it is you don't have to be super educated. And that's what I love, that it gives everyone an opportunity.
Yeah.
To be part of this pool. But it's dog eat dog there. And the first point of reference is not to compare yourself with anyone, but to inwardly, I would literally say when you start trading, people are like, write a trader's diary or this time I was feeling it. The first point of reference is, what type of person am I?
Sure.
Am I aggressive? Do I get irritated quickly? I get irritated quickly. It humbled me trading. I was like, I get irritated quickly. When the irritation comes, I'm like, that stupid thing is not doing anything. I'm like, yay. Remember, you're getting irritated. And the trade can show you who's boss, ne? But if you can handle your emotions in terms of how you daily operate, you know when your triggers are because that's what trading will do. It will trigger you. And you need to know, where you can stop those triggers and focus.
Yeah.
And not fall for them. So it's an inward introspection. I think when you trade, you need to introspect deeply. Don't just get in and say, quick money, quick. Introspect, how am I? Will I be able to handle this? That's why demo accounts are there. And I know everyone's like, I demo money, it's waste my time. I want to be making money. There's a reason for that. And that's the thing, that in the space, you're told you're going to lose money, start demo. But our psychology is, I want to make money quick. That's a death trap. It's an ego trap, as in you die many times in trading. It's how many times you then recognize where you're going wrong based on your daily activities, on even how you see life.
Sure.
I know. I feel like I'm deep right now.
This is where I want to be. This is why we're sitting here today. That's why we need to go deep.
I'm just feeling, Mox, kind of deep today.
We need to go deeper. That is not deep enough.
We must start there. We must start there.
It's just genuinely, in the general population, there's so much unlearning, so much of us. I'm even going to include myself there. So much unlearning we need to do, because we've been influenced by so much, in the words of MJ, rubbish.
Our friend.
Nonsense, actually. Actually, we've been influenced by so much, and we see so much on social media that, you know, we take in so much of these things, we develop so many bad habits. And I think it's just so important for us to even start the conversation as deep as possible, because so many people need to sit back and be like, okay, no.
Trading points out your bad habits. It points out your bad habits. It's like, this is who you are. And you're like, no, man, I'm not. I'm like this. I'm like, Trey's like, no, bro, you're like this.
Yeah.
Heed to that information. Go back home and don't be like, oh, Trader's Diary. What do I do that is now shown in my trading? Like I said, now I've learned a lot about myself in trading. I've learned a lot about my unreasonable self in trading, my toxic self in trading, and also the beautiful part of me in trading. It's not just about making money. It's how do you make it embodying your personality in it? Because if it's got nothing to do with your personality, if you're trading and it's nothing to do with your personality, you're bound not to do well. Bound, standard. You'll have lucky days.
Trading edge. So one thing I've noticed over the years, so when I got into trading a couple years back, one book I read was Trading in the Zone, and I know a lot of people love that book by Mark Douglas. He speaks about trading edge and whatnot, and obviously this is like many years back, you know, but we're reading it in our time now. And I think the idea and the concept of a trading edge amongst the community, in the current community, is not something that people actually look at. People just want a strategy and then they're done. Now, give me that strategy. I'll go see what I do with it. I'll go make money. But I think the idea and the concept of a trading edge has been so overlooked by so many people, because I think people don't really take trading as serious as we want them to. You know, so I want to talk about developing a trading edge. Yeah, how does one develop a trading edge?
You have to look back at self.
Okay.
Look back at self. Oh, sorry, I keep kicking you.
No, kick it. Come on, go on.
Look back at self. You know what your tendencies are. Don't live life obliviously.
Yeah.
Right? Look back at yourself. What is it? What are my characteristics? And there is a whole lot of instruments out there that you can trade. There is one that will match your personality, or a trading strategy that will match your personality. And not just personality, oh, you're a scalp trader, you're a day trader. You know those little ones those little tests that you do. It's who is Mobile, who is Moxima. I know I'm very, I'm goofy. And sometimes my goofiness, I could tell with, I lost the trade because I tend to be, especially on Fridays. It's like, calm down with the goofiness on Friday, because I know it's a Friday. Adjust that, take this way. So it's knowing who you are and how the trade will, and choosing a strategy based on what your characteristics are. If you are a very focused person, you focus, and I believed I was very focused until I realized I have a lot of whimsicalness in me. You know what I'm saying? My focus can just be like, la, 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 but I get it done.
Okay.
Right? I get it done, but not in that way that I think I'm getting it done, like that focusedness. In between, there'll be a bit of whimsicalness, a little fun and this, but I get it done. But because I know that, this is an important trade. I can't.
Yeah.
Is my strategy, is it aligning with me? Is it aligning with my characteristics? I'm getting deep when I say characteristics. I mean your daily behaviors. Okay. When I say characteristics, your daily behaviors. Your daily behaviors replicate how you will be trading. And I thought, as I said, I was focused until trading was like, not really. You tend to, firstly, lose focus. You tend to wander off. I can daydream during a trade. I'm like, oh. And then I realized, geez, I realize I'm a bit of a daydreamer. Can't do that. This is I need to. And so when I do that, I'm like, hey, focus. because I was honest with myself. Just I am a daydreamer because we always like to present. We always like to have the best characteristics, and we don't have. We have flaws. You have to embrace those flaws because those flaws will show in your trading. Do you get what I'm saying? Don't just be thinking of all the positive things about yourself. Like I say, I'm whimsical, and it's not a bad thing, but it affects my trading. And the minute I feel like I'm in that space where I'm feeling very whimsical, I'm not going to trade. No matter how I'm just like, no, I'm airy-fairy. I'm thinking of a holiday. I'm not really. Yeah, but I'm just,
Even
I'm
if
there.
the setup looks fine.
Even if the setup looks fine, I can take it. But in that setup, then your true emotion comes in. Angisha.
Okay.
And then I can always tell that, when you're just thinking, let me just stay in. Because I'm in that whimsical, little stage of my, I'm like, let me just stay in. And you see it a lot, you're like, yeah, wait, let me just stay in. Because then that kicks in and not the focus part of things. So even when the setup is good, try and create, knowing your personality, always try and click back to where your flaws can be. So as I said, if the setup is good and I feel like I'm not really, I'm feeling tired, or I'm feeling drained, or I'm feeling like I just want to be thinking of good things. In that setup, I must always say, no, stick to focus focus, because then you'd be, okay, now I'm starting to wander off focus. Because I know that's my tendencies. So just be aware of your tendencies and be honest about your tendencies. There's some people, when they're there, they see nothing but the trade. When they trade. That's so beautiful. I mean, now sometimes I'd look at him like, oh, look here. I'm thinking, focus, But that's because I know what my habits are or what my tendencies are, it clicks me back to normal when I'm in a trade or when I. You
used to trade for a bank, correct?
Not trade, but analyze, yeah.
Analyze for a bank. What's that like? Well, what was that like?
It was fun.
Yeah.
That environment was nice. I always say, now that I work for myself and work from home, I miss that social aspect of it. It was fun because there were a lot of brilliant minds, a lot of people who were educated, who had their perspective, and I learned a lot when I was there. Yeah, it was fun in that way. I love learning.
Oh yeah.
And I'm never, to me, I'm not the best. I'm never the best. I'm always learning. I'm always empowering myself, because the minute I start thinking that trading it'll be an ego death, ne? So you must always, you're never better than anyone.
Yeah.
You're always trying to better yourself. That's the attitude one must have.
Yeah, and that's something I developed like many, many years back. I developed this thing of any room I walk in, I'm there to learn, regardless. I don't.
Such a beautiful thing too.
Kids, it doesn't matter. Hey!
So if you took gold, where would you go? Tell you. Kids have got a brilliant mind.
They'll give you some revelations, misogyny.
You're like, where did I miss that? You know what I'm saying?
Yeah.
But I love that attitude about you. I love it because that's how I am too.
Come on, bestie.
I'm telling you, I also just, the minute you start thinking you're better and your trades are better than anyone else's trades, you may be really right because of your habits of focus, but not everyone is that way. And I always say to people, it's like, but they feel their strategy is better than mine. I'm like, well done. Okay, because I'm always trying to improve mine. I'm always trying to improve mine. Well done to you, and keep it up.
Yeah.
You know what I'm saying? I'm never bogging people down. I will look at people's strategies, and if I feel like it doesn't go with my characteristics in terms of my daily, how I roll on a daily basis. Like there's something uncomfortable about it, because you'll tell if it's an uncomfortable strategy, that because you don't understand it, you're just like, what does it mean? The minute you start saying, but what does he or she mean about entering at this point? Know that it's not aligning with you. But if you see and you're like, yo, this is making sense, then it's aligning with you. So that's when you practice your own intuition as well by doing that, specifically trade, because it is a lot of intuition as well.
Yeah. Let's talk the money hub. Yeah, what inspired you to start the Money Hub?
The Money Hub. So what happened? So when I had finished, this is just my career life, right?
Okay.
So finish high school, straight into varsity. Not even, I think I had the normal school holidays.
Yeah.
Straight into varsity.
Yeah.
In varsity, I do my 1 year, have my fun in varsity. Second year, I'm already now working for a stockbroking firm on holidays. The only thing I have is weekends for myself. So I've been working then, gaining experience. And it helped me because then I was able to then move up the ladder quite quickly at a young age. And then I get to, you go through the whole process of being rated and all of that. And rating just makes you want to become better and better and better, So there's a part of you that just gets into an overdrive. And by the time at the time where I felt like I just need a break was when I was working for Standard Bank, CIB, as the equity analyst for institutional as well as online.
Okay.
And at a point, I just got burnt out, and they could just tell because I'm generally a bubbly person. And my boss then called me and said, "There's something wrong. What's up?" And I said, "Oh man, it's just I think I'm tired." And I said, I think I don't think I have the love for the industry anymore. And he was like, "Are you not sure? Are you not feeling burnt out?" That's what he had said. And I said, "Yeah, I actually just feel like I want to leave and become a beach bum." That's what I said. Those are my words. He said, "So you're not going to go to another bank, the red or the green bank?" I said, "No, I just want to be a beach bum."
Yeah.
And then they said to me, "Let's strike a deal. You go work from home, be a beach bum, but we still want your research. But we can't employ you because at that time the working from home thing was not a thing, right?
Okay.
We all had to be. So they said, but we can't put it under Moxima is allowed to go. It's the only analyst that can work from home, Then they said, start like consulting something.
Yeah.
And I said, okay, fine. Can I have 2 months? And they said, yeah, okay, 2 weeks. I said months. They said, no, 2 weeks. So I had to start something quickly in 2 weeks, and that's how the Money Hub came into fruition. I was like, oh, okay, because they allowed me to actually. The reason why I said beach bum is because I felt like I had lost myself in the industry, and I needed to regain or get to know myself again. And that was the best way to shut off from the industry, concentrate on my research, and still find myself in a way.
Yeah.
And it's worked. The bank was very kind to me to do that for me, and I appreciate it quite a lot.
But what is the Money Hub then?
So the Money Hub is basically me selling my research to institutions.
Okay.
So there'd be, what's your view on this and this? Or they would then, get a retainer from that.
Yeah.
Yeah.
Earlier on you spoke about models, building models. I want to actually talk about that a little bit more. Look at your faces lighting up. You're just like, yes, on the money, bro, on the money. Building models, because I know that's something, even during the live streams when I was watching, you were talking about building models and all that. Can we just get into a little bit of that? Not a little bit, a whole lot of that, actually.
Okay, so because being an analyst, you have to analyze a lot of equities and currencies. And how it started off is I then said, how can I build something that has got my analysis, but I don't have to be pulling up all these charts on a daily basis? Because that would be my daily thing. I'm like, okay, let's start off with this. How's this looking? Pulling up the charts. And I said, I started off with Excel. And I took myself to these Microsoft macros, building macros or writing macros.
Yeah.
And I then took, if I had the live prices of all these indices and currencies, and then I just built my analysis in that so that when I do open up this model, I would then be able to, it would then change colors every time it was telling me that this is something to watch or this is still, it's non-eventful. Or I should look. So every time when that popped up, I would then go to the chart. But in that, I also had what would be the levels. Once it has done that, what would be the levels, which then also change color. So, for instance, in the equity space, it would be analysis. What I've done is built my analysis on every share that would give me a buy or a sell signal. And from there onwards, I would then, and that's including the indicator. So the macros was built on the price chart and an indicator giving me signals without me looking at the charts. You know, all of the charts for example, top 40 charts or the all share or the US S&P. But by just pulling up this, it will bunch up all the green.
Mm-hmm.
That means I've got a potential breakout on the upside. And if it does, I have percentages of how far it is from where the breakout point is, preparing me to now prepare my strategy. So it's not a signals, it's just more something that tells you what is happening with the share based on my analysis, and then bunching it up in terms of this is giving these bunch of currencies or shares are giving a potential sell and these are giving a potential buy. And if they do that, what are the levels that they may go to? So it's not much of an indicator, but it's if you're looking at which currencies based on my analysis are looking like they're going to break out, it will then give you that indication. Yeah. I've been working on it for a long time because I'm not a I had to learn how to write macros.
Oh yeah.
And it's fun. And part of me was like, man, I should have got into that because it's so nice to see something become, something that was like a plain Excel spreadsheet come into life based on what you built. It's an amazing, it's quite gratifying, I must say. I'll share it with you.
Yeah.
I will.
Then I'll go sell it to the viewers.
And it's true, it does that because it will tell you, particularly when it comes to being in the trade, it will say stay in.
Oh, wow.
Stay in.
Wow.
Ooh, something's happening.
That's powerful.
Consider, because I built that in there. So based on how the candle is behaving, what it's doing on because I'm all about forming a relationship with so that's what it says. It'll be like, stay in. Oh, now it's looking like it's doing this. If it starts doing this, then you need to be getting... It gives you that information.
Sure.
Yeah.
How long is it taking you?
It's 5 years.
5 years. Gee.
But I like I said, it brings me to tears seeing it. I'm like... You did that? So that's why I'm saying it's not saying, it will say it's time to get in. It'll be like advisable to get in at this point. And if you want, you can get in. But then there's a follow-up that, okay, now it's 2% away from your TP. It's getting there. It may not hit TP because it's followed what the indicator's saying below. You may have to get out. That's the type of information it gives you. Yeah.
So it's just relaying just a whole bunch of information and giving it to you.
Based on what the chart is doing and the indicator, it gives you that reassurance.
Gee, we could make money, eh? Jokes.
Not enough.
No, but
now I want a Lamborghini, guys. Now I be driving.
This can give us a Lambo now.
And we can afford, when the tires burst, we can afford
what color do you want your Lambo in?
Ish, black.
Black, oh ne.
The sexiness about that.
Ek rata met black,
Yeah.
But when we're talking like this, I know I'm just joking, guys. I'm just joking, but this is actually what has happened to the industry over some time now, where somebody found something and then they're like, no, let me go sell it to everyone as this holy grail thing. And I like how you're just putting out there, it's just a thing to give you information. It's not an indicator. It's not telling you to sell. It's just giving you information. And I think we're living in the information age. Those with more information, quicker access to information. Hence, you say even now when you were speaking about the institutions that they have like the guys are like, can I use the word cornered off, or like because they're analyzing and they got the prime information before the information even goes out. Now it's there, and I think that's why institutions have such an advantage over retail traders.
Retail is the aftermath.
Sure,
they're trading on. Yeah, they're making money on your blunders. They've already made it.
Yeah.
You know what I'm saying? And you know what my model particularly does is just because emotions can get ahead of you in that way, that reassurance that's written there, because that's how our minds work, that, okay, no, just stay in. You need that because you can then make your own, you can create your own fears in a trade. You know what I'm saying? But that reassurance that you need to stay in because of what it's reading is something I think we kind of need, because we could make blunders like that. I'm not saying it's foolproof, but it will kind of guide you if you should stay in. And if at all it's reached TP, if it's going to like TP2, like your second take profit, and it seems as if there is more room, more legs for it to run, it will say, change your TP to the next. There's potential. Judging from all of this and the movement, downside could even be steeper, or upside could even be steeper. Then you're thinking, okay, let me change my TP, let me make some more. So that's what I was concentrating. It started off as me wanting to create an indicator. And I was like, there's so many. I just want reassurance. Based without me having to look at the chart like this. Yeah. It would be just, oh, okay, all right. And then it will say something's happening. Based on this, something is happening. It may not go to TP. Maybe you should start considering. You know what I'm saying?
Yeah. I do get what you say. How do you define financial emancipation? Now I'm speaking English, guys.
Yes. Tata movies.
Yes. I don't know if you could, I hope you understand what I'm trying to ask, but how do you define financial emancipation?
Financial emancipation is being good with retaining your capital and being good with expanding it. If you're not able to retain your capital or to grow it, you're not financially emancipating yourself. That's one, when you're trading. And financial emancipation is getting to know the stock market itself and getting to know what it is why are you trading? Like, what is the reasoning? Educating yourself about what you're trading. Because as I said, trading is, you don't have to be super intelligent. You don't have to have an IQ that's hitting, that's cracked the roof. No, you just have to be very skillful, and you need to know yourself in trading, and that's financial emancipation. But particularly is knowing that you can grow it and how to grow it. It's not about making a quick buck. That's not financial emancipation.
Actually, that's true, because I think we look at it from that perspective. If I make money, when done, the job is done, it's finished.
Financial emancipation is to be able to even create generational wealth. That's financial emancipation. And it's to be able to make that money and, as I say, grow it and not get persuaded on luxury things. And not that you mustn't ever, spoil yourself, but using it on stuff that's really... that gives you no return back. That's not financial emancipation.
Sure.
That's not how wealthy people retain money. That's not how they grow their money. Wealthy people don't grow it by spending it. They grow it so that there is something that's left behind as well, not just for the now.
And you're not just talking,
right?
You're not just talking out of thin air.
No, because I'm always, knowledge must always be imparted. If you decide, I don't know if you were there, I made a speech. I was saying that if you are very skillful, what trading has done, which is a beautiful thing, it showed people that they have potential. It's opened up the door of, you don't have to be enslaved to a particular thing, but there is this opportunity of growing your wealth, and it's not just working under anyone. It's given you the opportunity. It's how you use the opportunity. And that's what I love, that everyone has the opportunity to do that. But it's just now, in true capitalistic style, it's made to be such a greedy thing when it could be something that assists one to be able to educate their family members, to break that, because that generational curse of not having money in the family. It's not about if you indulge in something like you want to start trading, you must think of it as a long-term thing and not just and long-term thing the way you can now impart the information back to your family members, or someone in your family can also do it. Do you get what I'm saying?
Yeah.
So that's financial emancipation, when you can get everyone in your family out of a rut because of a skill that you've developed that you didn't have to get straight A's for.
Sure.
That's financial emancipation. And retaining that wealth. Retaining it. How this I?
I'm digesting. I must digest.
And I think we should all have that mindset. It's such an important thing. Because we've been given, as I say, we've been given such a beautiful opportunity, all of us, to be able to trade for ourselves. Remember, long ago, it was just meant for asset managers and for people in the dealing desk. Now you're given this opportunity to be able to handle your own money and grow it. Can't mess that up. And you can't keep that skill to yourself. Give it to your community members.
Yeah.
You know, like, get the kids there, get them involved, get them to know about this. Hey, you know, this is what it means when this and this and this, especially the young brains. They fresh and they hungry to know this. That's financial emancipation is not emancipating yourself only, but emancipating your community as well. And when you think of it that way, your objective of just wanting to make a quick buck changes.
Financial education, I think that's something that I know you've kind of touched on it here and there, but I just wanted to put it in its own place right now. Financial education, financial literacy, those same thing.
You're right, correct.
What's your take on that? Like, because obviously I know you have referred to black as black people, this is where we get shy at 10-0 now, swear. Unfortunately, hence at the beginning of the interview, I asked, were you having conversations about money? Because China understands that, okay, you come from a background of, there were no conversations about money, but somewhere along the line you had to learn and you had to get the financial literacy to be able to grow as a person.
And black communities, we don't have that as one of the learning foundations for your kids, is to have that financial literacy and and show them the possibility of growing money, right? When the first thing we did, and because we've got such a spending mentality, consumerism, first thing you do is you want to be already creating debt. Like I said, my first thing when I got it was, let me get a house. Yes, it's an asset, but it's a debt I have to pay. And which is now, I could have maybe rented out for a longer space of time and then accumulated some capital.
Yeah.
In retrospect, that's what I'm thinking now, that hey, I should have just done it this way instead of the first paycheck I get, I consume. Do you get what I'm saying? And yes, it is, as I said, it's an asset, and I did get my money, like a return back from that when I sold it. But that is the consumerism mentality that we all have to kind of stop and think, let's grow the money. And we don't have that as black people. We don't have that foundation. And financial literacy, guys, you go to Google, there's so much information about financial literacy.
Yeah, it's actually its own thing. Like, especially if you go online as well, like you say, financial literacy, there are so many people, influencers, or just people teaching about financial literacy, because I think everyone has seen that, hey guys, this thing is serious. It's very serious,
guys. It's serious to have it. But also it's the person who's delivering the information, right?
Okay.
You have to... People reading these days, it's not a thing to be reading, because and that's fine, because then if it's not, then show it with images that stick to you.
Yeah.
But it's something you have to go through. You can't skip that part of your financial emancipation. You can't skip the literacy part of it.
An average household in South Africa right now, average black household in South Africa right now, middle class, lower class. What can I say? What advice would you give in terms of financial literacy? Where to start for those people?
Build a portfolio. There are many brokers that offer where you can literally just buy shares yourself. Build a portfolio. Start there. Start a foundation where you. Oh man, I wish you could be a day like me for one day and just kind of see. I think the quick buck thing has been sold so much that the whole essence of building a portfolio, and I mean an equity portfolio, has been completely swayed on the side. And that's where the whole breaking generational curses thing of poverty comes in. Because you have this thing that you're building a portfolio. I'll give you an example. I've been telling a lot of my clients to now sell gold because it's done the 1, 2, 3.
Oh yeah.
Yeah, Dow Theory, and to get into platinum. So that's because of my analysis of now it's finished that cycle. Platinums are starting to come in. Platinums have fallen. I mean, platinums were once the darling.
Oh yeah.
They are going up so much. Platinums could do 20%. They've done 20% in a week. When are you busy chasing Forex and things like that? When a portfolio of a 20% move on one share.
Sure.
Do you get what I'm saying?
Yeah.
So I'm not saying don't trade Forex, but to have something that at least encourages you that money can be made, I think it's produced when you have a portfolio of shares. And that's standard. Then you can double. I have the both. I have the CFD that I have, and then when it hits me and I've made a few losses, I'm like, okay, hey, at least let me just go to my portfolio to just ease my wounds. You know what I'm saying? To make me feel like it's okay, you're still doing good. But if you have something like a CFD that's always bogging you down, there's a point where you're just always losing. There's a point where you're thinking, am I good at this? Should I be in this? When you build a portfolio, it doesn't do that because there's no multiplier effect. It's just compound. But I would still encourage people to trade Forex or,
Yeah.
because it's a very special skill and you can really master it.
That's true. If you could go back if you could go back to day one and whisper something to your younger self, what would it be?
You should have started the portfolio long ago.
Why am I even asking?
You should have started at 5. No, seriously.
Yeah.
I really wish I'd started. Another thing, as I said, my family was more in the medical sector. I think if everyone was in finance, I think they would have taught us quite early. Start teaching your kids.
And I think when people look at like the finance industry, they think, hence earlier on when I made my example of 500 Rand, you're like, that's a lot of money.
That's a lot of money. Let me tell you a few. I give you a few list of shares that are doing pretty well, that are trading at 16 Rand, 8 Rand, that have a high upside potential. Why does everyone think starting a portfolio you must have 1 million or you must have 100,000? So if you say every month I'm going to put in $500, you keep buying that share. The more you buy, it doubles up your compound.
Yeah.
That's the thinking you must have. So when CFDs hit you left, right, and center, and when here, there, when I just, okay, at least my portfolio
at least on the other side, it's like, because this side it's tough. This side it's tough. What's something that you wish more traders understood?
That, and it's something that everyone says. But I will say this, trading is based on your daily habits, and it is not easy, and you're not going to make a quick buck, but it's very possible over time. Because it's a skill. It's like, it's everyone uses this, but it's probably the best way to describe it. If you want to be the best in soccer, you won't you're not going to practice once a week. You're going to practice every time you have to become the best. And that's becoming the best, unfortunately, requires a lot of practice. A lot of inward inward introspection, how you behave. It's not about making quick money. It's not. And if you start off with that, you're doomed. Unfortunately, you're doomed, Shem.
Sure.
And you need to remove yourself from that in order to understand the market and how it's this. Remember, you're trading. This is millions and billions of personalities that are trading. And we all have unique, yes, they could be categorized in the same place, but all unique personalities. And you're competing with all these other personalities. You need to find your type of way that makes it right. And I still maintain, you're not going to make a quick buck. You're going to fall. You're going to rise. Once you rise, what do you do with those profits? Portfolio.
Yes, done. Portfolio.
Further in your portfolio, start again. Don't get excited by, oh my God, I'm making, you know what I'm saying? Because you know what CFDs can do. You'll make that 3,000 USD out of a 500 account that you made. And then one lousy trade wipes it out. That's discouraging. But it's also, it's discouraging for most people. People don't like failure. It's only a few that be like, it won't beat me, you know?
Sure. Moxima Gama.
Hey, I didn't expect to be this deep. You make me this.
We must dig deeper and no, but thank you so much.
Thank you. I enjoyed doing this.
It's nice.
Yes,
Yeah.
Wink. And you're just such a real easy interviewer. I see why you're the best. Because yes, I really do see that. I see why this podcast is the best. Actually, you guys are really. You delve into things that are unspoken.
It's taken time to get here. It's taken a lot of time, a lot of learning, and it didn't happen overnight.
I'm so proud, but it's also the way you interview is so easy. I was nervous, and I do a lot of interviews.
Oh yeah.
People say, "I'm sorry, you're gonna ask me," it's like economic stuff, but. So somehow I just sat here and I can't even believe I've just been sharing. I didn't even know I've just been sharing so much that I have never shared with anyone else in any podcast. It made me also realize, as I was speaking, it made me realize a few things that I'm also doing wrong when I'm trading as I was speaking, you know?
Yeah.
And that's a very brilliant thing for an interviewer to be able to bring out. So I'm happy. You did this.
Thank you very much for honoring the invite.
Yes.
Yeah, no, appreciate it so much. What's next for you now? Or currently, what's happening now? What's happening? What's next?
What's next?
Yeah, I know sometimes they say mustn't share your plans.
Oh, I sugar.
You know, I have a thing lately. You know, and I know a lot of people might. I have this strong belief. I'm a big believer of a belief system. It's like a person's belief system, so powerful, and I think that's something a lot of people must dig into a lot. Their own belief systems, you know. Hence, you'll find that some people they don't believe in ukloya and all that, and you'll find that their belief in not being in that whole thing is so strong that even if a person who believes in it comes this side and they try to do anything, because of a belief system, that things won't shift on your end because of what you're rooted in. You know, I have such a... As I'm cooking now, and I don't know what I'm cooking.
Cook. Smelling good. It's
smelling nice. Stove is still on tray.
Smelling palatable.
Stove is still on tray. This one's a slow cook. No, but I genuinely... I know what I'm cooking. So I have this, this is something I've been thinking about, not something I'm advising people to go do. But I don't know, in terms of like the word of God and whatnot, I'll just bring this where God prepares a table for you in the presence of your enemies and whatnot. I'm like, what does this mean exactly? And you think about it to a sense of like, I'm not afraid to share my plans with people I'm chilling around with, because I want to show them that, no, guys, when I say something's going to happen, it's going to happen. I've had cases like that where I'd share my plans, and sometimes a few of my inner circle would be like, boy, you're oversharing, relax. I'm like, oh, okay, I will try not to say anything.
You know what? I'm exactly like you. I was just about to ask you what star sign, because you know me being a chakran. But, you know, a very good friend of mine who I also consider a sister, Usihle once said to me, when I doubted my own, when I was busy developing my model.
Yeah.
And I was like, man, I'm sure someone has done something like that. And, and she said something, she said, Beimele when it was waiting for you only. It's never going to happen because it's waiting for you.
Sure.
And if it's waiting for you, it's yours. No matter how much people try and take the idea or anything, it was meant for you. It was waiting for you. It birthed itself and said, now you're my mother. You now do this for me. So whoever tries to take it, it's not going to pan out the way it's meant to do.
Yeah.
Because it wasn't meant for them. So it was like, the more you delay it, now it's going to sit back and say, okay, when you're ready. But I'm your baby now, not anyone else's. I'm your baby now. And I honor that. I honor that it's chosen me,
It's like you were part of a conversation we had just before you walked in.
Baited.
Yeah?
Baited.
No, literally, he said exactly what you're saying.
Wow.
I kid you not.
You see how aligned this is, guys?
What you're saying, I'll tell you about it later, but what you're saying, it's I kid you not.
They say kids choose you. The one in mind chose me.
Yeah.
And it's taken 5 years, which ordinarily would have taken them a year or anything. But it's because I have a lot of other things that are happening. But it's chosen me and I'm honoring that. So even if I share it and someone thinks, hey, I'm going to do the same, it's my baby.
Yeah. And so what's currently happening? What's next?
So what's next? So a lot of my mentors were just saying, I don't know, man, guys. This whole start a podcast thing, and I'm getting to the streaming space thanks to MJ.
Oh yes.
He's really helping me out with that. That's really great. Pushing my model is one of them, and I just want to. I want to. That's what I'm going to be dealing with now. But I'm not gonna skimp on enjoying my life.
Yeah.
I mean, I like a good time. I love traveling and all that stuff. So that's a part of it. But in terms of my focus, I've developed this love of teaching people the essence of the market and the true essence of it, not just, and the truths about it. So I'll probably hone into that with a few seminars on that. But getting into the space, your guys' space now.
Welcome. We welcome you with open arms, man.
No, definitely. As I said, you guys made me feel really comfortable. I love that.
No, thank you very much. No, thank you so much, Moxima Gama, for today, for coming to give. And I appreciate people who come to give on this platform. For, like I always say, every single interview is for the benefit of the next person. If it's not serving that purpose, then let's rather just not release it. But I believe when somebody comes to just give, we are grateful. I'm grateful. We are grateful. And I'd like to believe the viewers at home are grateful as well.
Yeah, we just need the truth about things. And we also need to forget to have fun in it,
Yeah. No, thank you so much.
Yeah, bong.
Yes.
Cool.
All right, guys. Thank you guys so much for watching. This was another installment of Market Masters with myself, Blitz Mbani, and I'll see you guys same time, same place next week. And we're out.